Hey everybody, this is Jim at SP500chart.com. We're going to take a look at the chart of Arna Pharmaceuticals that either has or is on the cusp of what may be a major technical event in its chart. Before I take a look at it, I want to remind you that the website you see up here, SP500chart.com, and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. The first thing I want to say is, what is SP500chart.com? Well, I'm going to put a plug in. It's where I do every day with the S&P 500 chart what I'm doing today with the Arna Pharmaceuticals chart. Plain and simple. So if you're interested, go check it out. Look, I cannot do this quickly. I apologize. It's going to take at least 10 to 12 minutes because it's just not a simple thing. So, that said, let's start looking at a daily chart. First thing I want to show you is that right around the 1st of March, very late February, we had what is called a golden cross. A golden cross is when you have the 50-day moving average, which is this pink line, cross up from below the 200-day moving average, which is this bluish set of dots. I call them lines, they're actually dots. Now keep in mind, as we zoom in and out of this chart, if I'm not on a daily chart, then this is not a daily moving average. More correctly, we should call this is the 50-period moving average, the pink one, and this is the 200-period moving average, which is the blue one. So when we zoom into a 30-minute chart, it now becomes still a 50-period moving average based upon a 30-minute period. Right now we're looking at it based upon a daily period. Quick recap. We had the big run-up after FDA approval. Arna entered a period of consolidation that was defined by these two lines. This one right here and this one right here. Both of these lines had technical significance, and I mentioned back in April of last year that if this bottom line ever broke, we would in all likelihood be looking at a move down to the low 4s or the high 3s. That line broke, and I'll be honest with you, I'm so sold on the fundamental equation of Arna Pharmaceuticals, even though I knew to sell on a back test of this line, I couldn't make myself do it because I just, in the back of my head, I said, you know, I'm just going to buy on the dips. I was already buying these dips down in the mid to high 7s, so I'll just buy more, and that's what I've done. So, make a long story short, this pattern broke down. And when it broke down, we go to the first turn inside the pattern right here. We measure the height of the pattern, and then we look at where it broke down from. Right here, we put it where that line broke, and that takes us down to this level, which was 411. Depending upon when I draw that line, it could be 408, it could be 402, because the line is not mathematically perfect. But you get the idea. We should have gone down to the low 4s. We did. All right, now, why is that? Why does that have anything to do with what's going on with Arna Pharmaceuticals now? Well, because if we zoom in now, and we look at what has been going on over the last 4 months or so, since November, when we made that double bottom, perfect, nice little perfect, well, I don't say perfect, but a nicely formed double bottom, which, by the way, once we got over this peak right here, we never looked back. We came up, hit an area where no one could really say we would expect resistance there, but it happened anyway. Then we came up to just under 8 where one would expect resistance. Then we started going sideways. And the vast majority of this sideways trading took place between a set of lines. This is the bottom line. This is the top line. Or this is the top line. There's a couple of interpretations of where that top line belongs. It could be here or it could be here. Now, this line right here broke out early in the week. We got over this line as soon as we got over about 660 or so, or call it 650. This line we broke out over a bit later in the week. The moral of the story is this. If we look at the last 3-4 months of trading, what took place this past week is, without a doubt, a breakout over this consolidation pattern. No matter where you draw this top line, here or here, we are now out of that pattern. The bottom line remains the same. And we had 1, 2, 3, 4 touches on that bottom line. Now, I'm going to zoom back out and show you where I think this could get real interesting. A long-term trend line can be drawn in Arena Pharmaceuticals in a couple different places. If we start with our 1350 high back in June of 2012, and then our $11, let's call it high, in January of 2013, and then we extend that line. We missed that line, by the way, in June of 2013, and that was just prior to the breakdown. So we were beginning to turn over there. Now, if we extend this line down, you can see that for just a bit, almost we closed one day over this line, made that run up to almost 8, and then got turned back pretty abruptly. If we say that is a little bit of out of bounds, if you will, then we see the next 2 peaks line up perfectly with that green line that goes all the way back to 2012 and early 2013. So the question becomes, let's go back on the daily chart again. Is that the proper place to put that line? Because if it is, we are now in clear trend reversal territory. Now, if you follow the S&P, let me give you an analogy, and the time frame doesn't line up, okay? But if you follow the S&P for the past 6 years, I would equate right now, at least for right now, I would equate this bottom down here to the winter of 2009 in the S&P. That was where the bottom fell out, and then it started to come back and it consolidated for a while. And then I would equate what we saw this past week was when the S&P first broke over 1,000. Okay, so, and I'm not saying that the ranges are the same or anything like that. All I'm saying is, you look at the chart and you say, well, Jim, you say that we may now be in a trend reversal. Yeah, but you don't always know it's a trend, a confirmed trend reversal when you're at the bottom. Because you make otherwise we could have maybe said this was a trend reversal here, when obviously it wasn't. So we made what looks to be a capitulation by the longs back in the fall of 2013. We rallied back up, and now we spent most of the time going sideways. That would be equivalent to what we saw take place in late spring and summer of 2009. And then later, I believe it was in the fall of 2009, was when the S&P got a burst of buying into it, and we started to rally over 1,000. that was when the S&P bottom was confirmed. As soon as the S&P broke 960 back in 2009, that confirmed, I believe that happened in July, that confirmed that this was a bottom, and now we're establishing an uptrend. Okay? So we've got to get over this line right here before we can say now we have an uptrend established. Now, I pointed out something a while back too, where I believe that we may be looking at a working inverted head and shoulders pattern in Arena Pharmaceuticals. If so, this would be our left shoulder, this would be our right shoulder, and this large dip here would be the head. Okay? Let me erase those real quick because we're going to talk about another potential inverted head and shoulders pattern here in just a second. So, if this is a properly drawn trend line, then we are in breakout territory over this green line. But not all of our points along this path line up perfectly. As a matter of fact, this is a pretty good, this actually is I think a good average interpretation of that upper trend line, because if I take it and move it over these two tops right here, then you look at it and you say, well, we've been up and down all over this line for the past 4 months. I don't think that's very typical stock chart behavior. So that's why I'm inclined to let that 1350 be up there, and then take this high, and this was just a little momentary exuberance that got over this line, but was quickly sent back down to form a base or to consolidate. Okay, sorry, this is just going to take a little while. Now, I mentioned a possibility of another inverted head and shoulders pattern. Well, if we take this peak right here from late May, and then the high that we had back in January, and we snap a line across those two guys. By the way, inverted head and shoulders patterns form as continuation patterns. Okay? They're not all bottoms. Some of them form after a run up. Some of them form after a run up and then a significant sell-off, and then that significant sell-off itself is an inverted head and shoulders pattern. So if that is what we're dealing with here, then this line right here would become a neckline, and we are under that. Now's where it gets interesting. If we take a look at the last 4 months, and we apply the same rule that we applied when we looked at the large topping pattern, where we measure the height of this pattern right here that we've been in for 4 months, and we do that from the first turn, and I'm going to go with this interpretation of it instead of this one. So I'm getting rid of this line right here. Then what we end up with is this. We end up with a pattern that once it breaks out, we can measure our expected minimum target from that pattern. And in this case, we have a minimum expected target of about, I'm going to call it 875. Now what makes this interesting, extremely interesting, is the fact that 875 means we get above this line right here. So if we get above this neckline, and this does act as an inverted head and shoulders pattern, and let's say we do that by the beginning of June, let's just pick a date, then we know how to measure an inverted head and shoulders. We measure the depth of the head from the neckline, and then we add it on to wherever it might break out. I can't tell you where this one might break out, but you see here we have a target around 15. Now, you may be saying, technical analysis doesn't work with biotech stocks. Well, I'll say this. Oftentimes, biotech stocks that live and die by binary events, I will agree with you. But I don't think Arena Pharmaceuticals right now is living or dying by binary events. And if we get over this line right here, and we continue to see traction in the market with sales of Belvique, then I don't think 15 is an unreasonable target. It's got work to do before it gets there, and it will not get there in one fell swoop. It will take time. There will be resistance, and for example, there will be resistance on getting around 8, okay? Because we've got a couple things there. We've got this lower trend line that broke. We've hit it twice. This will not be easy to get over. But when it is overcome, again, you could look at this as a cup and handle, and we measure the same thing, and we get up to about 15, maybe even a little higher with the cup and handle, or it's probably about the same. So, all of this to say, and I got a couple more things to talk about too, is that getting over this line right here in the next week or so, and this line is currently at 7, it'll be at 743 on Monday, right about the open. If we get over 743, then we would, by all means, expect to come up and challenge 8. So I think we got resistance at 743. We're going to have a battle at 8. After that, about 912, right at about 11, and then about 1350. Because these were significant highs, and I'm just projecting horizontal lines off to the right. Finally, I want to talk about one more quick thing. Let's get rid of the MACD. I'm going to, if this is a significant bottom here, and by all indications so far it is, then if we create a parallel line here and put it on this last peak, you can see even here, remember I talked about this move to 8 being a little premature. You can see that it was over this line, and it was also over this line, okay? And if we extend this line out, I am very open to the idea that we could be inside a channel at this point, and it sure would be nice to make a tag up on this top line at some point in late summer or fall. Keeping my fingers crossed there. The one last thing I want to share with you, again, there's that consolidation pattern. You can see how nicely formed that is. By the way, there's an old saying where they say the flag flies at half-mast. And what that means is often the move that preceded the formation of a consolidation pattern is often equaled by the move that comes out of it. So if that's the case, we would reasonably be expecting a tag on this line at some point. Finally, the ADX. You know, I can't really go into all the details of what the ADX is. All I know is what it does. The ADX has a tendency to point out where moves, either positive or negative, have topped out. You can see that move up to 1350. The ADX was pretty high. And then it was low. And while it was low, we went sideways to down. Then the ADX peaked over 60, which some people in the Yahoo forum were talking about a pincher play. And that's really where the rising ADX and a descending RSI, which is not on this chart, but it roughly follows kind of what we see in this low. As you can see that obviously the RSI was very low when we were down here. It's when they get very close to each other when you have the RSI on top of the ADX. Well, what I want to show you is this. So here was the end of this move. Projected it pretty well. There was this secondary dip down here, but this told us be ready for a reversal. Then we got up to this level, and the ADX was pretty high again. Then we got up and we made that move to about 8, and that was accompanied by a slight delay, but you can see ADX was pretty high there. So we've been seeing every time there's a peak, there's a reversal that kind of sets up. It's either a major reversal when it's high, or it's a minor reversal when it's not so high. But look what the ADX has been doing lately. The ADX is actually at pretty low levels. So that tells me that if we start to mount a rally, we should see the ADX climb into that rally. But all I'm saying is this is indication that we do not have a significant rise in the ADX, as we've rallied off of the very low 6s to over 7. This has just been going sideways, and that sort of tells me that that this move could potentially have legs. So for now, let's get over 750. Getting over 750 should kick this larger, if I'm right, and this is a large inverted head and shoulders consolidation pattern. Left shoulder, head, right shoulder, or if you prefer, we'll get rid of the left shoulder and we'll call it a cup and saucer. Really, I prefer the inverted head and shoulders interpretation. Then getting over 750 with a nice close, and especially getting over 8, should be setting up a move that is quite significant. So guys, I've talked way long enough. The simple fact is there's a lot going on. So thanks for watching, and I got one more thing to show you, wouldn't you know. We talked about the Golden Cross back here in late February. We had the other side to that was back here in March of 2013, where we had the quote death cross. That was right here where I'm wiggling the mouse. You can see that we went sideways for about 2 months and actually had a rally, but that was the last rally. Well, fast forward. Here's our Golden Cross, and we kind of noodle around and we start to look like maybe we're weak, and here we are now about 2.5 months later, and we've had a nice rally that looks to be getting over this area of consolidation, in which that Golden Cross is right there in the heart of it. So I think things are looking pretty good. Thanks for watching. Take care.